The US dollar is bouncing from support, but is this temporary before the next leg lower or something more? I will have all the details in today's video, including the latest on the DXY, the euro, the pound, gold, and silver. So guys, my name is Justin Bennett, full-time trader and founder of Daily Price Action. As always, all of this is my opinion only and not financial advice. So if you've seen recent videos, what we talked about here for the DXY was this area back here at 98.7 with this pocket down here being an imbalance. So back here on the way down, what I said is I wouldn't be at all surprised to see this low swept. We got that right here. The market held on to support, and so far we're seeing a bounce. So this is in line with what I've talked about in previous videos, where we are seeing the market start to come back here to mitigate this inefficiency. So the inefficiency I'm referring to is really this candle right here, this red candle. So all of this back here was an inefficiency. You're seeing the market come back here now with these highs and start to mitigate some of this, okay? So this is by no means saying that the bottom is in for the US dollar, because this could simply be relief here for this market before the next leg lower, right? So you've got to keep that in mind that so far we are seeing these lower highs and lower lows develop, all right? So the very first thing for this market when we look at it is that you can see that up here, if we draw a level off of these lows, this is essentially going to be your resistance area for the DXY. So you've got this level down here, right around 99.5 at these lows down here, all the way up to about 100. So this entire region up here is going to be your resistance level, or really area for the US dollar. Now, in order for this market to turn bullish, like I said in previous videos too, it would have to not only reclaim lows like this down here, but it would also have to get above confluences of resistance now right around 100. That's not going to be an easy task, because that's also a psychological level. So you've got lower highs, lower lows. You've got the market now holding below this area here. So all in all, guys, this is a new downtrend for this market. Now, with that said, though, the thing you've got to be careful of is if you move out here and you look at this structure right here. Okay, so let's look at these highs and lows. Back here, we had a break of structure. This down here is your protected low. So technically speaking, as long as we're above these lows back here, this is technically a higher low, okay, within this larger structure. So even though you have this trend right here, lower highs and lower lows, within this, or really the larger structure here, still points to a bullish US dollar, okay? So this is why in the last video I said you've got to be careful getting bearish down here, especially into support, because overall this market is technically still bullish. However, in order to play that bullish trend, like I said before, the market would have to get back above not just levels like this, but also areas around 100. This is going to be resistance until proven otherwise. So now if we look at the euro, let's flip over here to the euro USD. And by the way, guys, if you want to see exactly how I trade and get my full SMC strategy, check out the link right here below this video. That's going to be a free SMC strategy. Click that link, enter your name and email address, and you will be given completely free access to the same exact strategy that I use every single week. So right here, we can see the euro is pulling back from this red box back here. This is what I showed you guys in previous videos. This was an inefficiency back here. We saw this mitigated here onto candles, and you can see the long upper wicks that formed here, right? This was indicative of a coming pullback, which we've seen so far, right? So far we are getting lower highs and lower lows from this market. However, all in all, right, this short-term trend here is bullish, right? Higher highs and higher lows. So like I said in recent videos, this area down here, this high right here, and this high, this is what's going to be key now for the euro, right around 1.1620. That's what's going to be key. Okay, so basically between 116 and 116.20, this is going to be the area to watch. Now, if we were to see this market erase candles like this back here and start to close down here in this area, that would start to look a little bit more bearish for this market. But as long as we are just kind of pulling back here into levels like this and showing demand at support, then this is a short-term uptrend. Now, just like with the DXY though, right? Trends within trends. So right now, this trend right here is bullish, okay? However, if you look back here, we have a break of structure, and this is your protected high up here. So really, in the bigger picture, this trend right here, the lower lows and lower highs, this is technically still intact. And this right here, this entire pullback into this 117 area could be nothing more than a lower high based on this one back here, okay? So again, trends within trends, you've got to be a little bit careful here. It really just depends on what your horizon is, right? If you're trading things like the 15-minute time frame, even the hourly time frame, then this is what you probably want to pay attention to. If you're trading things like the daily or even weekly charts, then this downtrend is what you want to pay attention to. Okay, so it just depends on the horizon that you are trading. All right, so GBPUSD, guys, we've seen the market now pull back from this resistance area, 1.3655. This was the highs back here. We saw the market sweep these highs, so far pulling back, right? Same thing though I've said for other markets, guys. This is technically an uptrend right here. However, at the same time, really, it's just a range-bound market. Has been the case, almost all year, basically. Except for this high back here, this has been just basically sideways action for the pound for the better part of 2026. So you've got resistance up here around 1.3655. You've got support coming in down here at these highs, right around 1.355. Okay. So resistance up here, support down here. Below this, you've got that area around 1.345. So let's move along to gold XAUUSD. Now, before we get into it, if you guys want to use the broker that I trust the most, check out the link right below this video for IC Markets. With that link, you can get a 100% deposit bonus up to $1,000. Plus, on top of that, they're going to give you 50% deposit bonuses up to $25,000. So that's $26,000 in total that they're going to give you for trading credit to trade with. And on top of that, too, if you deposit $10,000 or more, I will grant you lifetime access to our Discord group and also the full SMC course. All right, so guys, so gold right here, pulling back into the support area. We talked about this recently, but these highs back here, this is going to be key for gold now. You can see so far just kind of pulling back here into this region. So far, yes, we do have the market trending higher highs and higher lows. Obviously, in the bigger picture, though, all year long, this market has been trending lower. So the one, question right now is like, let's say the weekly time frame, right? You've got this low back here. This was technically a breakup structure. This up here would then be your protected high. So the one thing that I'm still waiting on for these markets is really the US dollar, right? What happens with the DXY? Because all in all, you can see that since the start of the year, we've had nothing but lower highs and lower lows for this market. And even though we're starting to break out, right? Technically speaking, this is still a downtrend. So the question that I have now, again, is where does the DXY go over the coming days? And how does gold react to areas like this back here? Okay, if we start to see the market come down here and take out lows like this, then it would obviously start to look a little bit more bearish. However, at the same time, this market is also breaking out. This down here is the yearly open for gold, and it's so far trading above this. So all in all, guys, on the surface, this market continues to look bullish as long as the US dollar does find some resistance, right, the DXY, and this just becomes some relief before the next leg lower. I think if we get that and this market can hold on to support areas like this region down here, so right around like 45.50 or so, then this market does still look constructive over the short term. Okay, so moving along now to silver XAGUSD. You can see here that on the 4-hour time frame, we talked about this way back here, but you can see that we had a BOS down here, breakup structure. This became our protected high. You can see we took that out over here, giving us a change of character. Since that time, it has been higher highs and higher lows. So this market looks pretty constructive, guys. Looks pretty good. However, the one thing you've got to be careful of with silver is the market is getting pretty close to its yearly open around 71.33. So this area back here, you can see the lows back here, these highs, this area right around 71.33 is going to be a big one that sellers are likely to defend. So really be careful of this. If you're long this market, in my opinion, you've got to be careful as the market approaches that level. Okay, now in the short term though, again, you can see higher highs and higher lows, but just like with gold, the one question I have is where does the DXY go from here? Because look, if this rally is going to fail, okay, if this move off the lows is going to fail, it's likely to do so right around the yearly open, okay? And I'm not saying that it will, guys, but the point is that you've got to be careful as we come into this yearly open, also with the DXY, largely undecided so far this week, showing some strength, but again, we don't know if this is just going to be relief for the next leg lower or something more here if it can reclaim this area up here, okay? So, largely undecided right now. Things like the 4-hour time frame are showing a bottom and showing strength. However, you look at things like the weekly, and just like with gold, right, it's been lower highs and lower lows all year long. So far, it's inconclusive as to whether or not this is a larger bottom, or we are just ranging here between areas down here at around 54 all the way up to about 71, 72. All right, so key takeaway here for silver is just be careful the closer we get there to that 71.33 area, because that is going to be a big test. Now, obviously, if we were to come down here and start taking out lows like this down here, that would start to look more bearish. But as of right now, in the short term, this market is still carving higher highs and higher lows. Therefore, at least until we get up here, right, buys on pullbacks does seem to be the way to go. That's it for today's video. Keep it locked in here. Subscribe to the channel. Also, check out that free SMC strategy right here on the screen. Click on that link, enter your name and email address. You will be given completely free access. So until next time, trade well. I will talk to you in the next video.